Pinch punch, it's the first of the month, Thursday the 1st of July. I'm FX Blue and this is the market brief. So as we closed out Q2, we had a bit of a reality check about Q1 yesterday. Data showed that consumer spending was a drag on the economy and GDP fell by 1.6% in Q1. But here we are kicking off Q3 and the economy is 8.8% lower than Q4 2019. It serves as a friendly reminder of how far the recovery still has to go to reach pre-COVID levels from 2 years ago. And don't forget, July 1st is when furlough starts to wind down. Many see this to be the real acid test for the recovery, and it's likely to be the start of unemployment numbers creeping up too. The stamp duty holiday will also start to be phased out today. The effect on volume and the price of transactions is expected to be another drag on GDP. So welcome to Q3. Challenges of the recovery start now. But hey, that age of free money couldn't last forever. In the market, sterling broke briefly below 138 against the dollar, but we opened this morning around 138.15. But non-farm payrolls tomorrow may well push sterling into a new lower range. Over in the US, Dallas Fed president told Reuters that he would like to see tapering of support begin before year end. Given the rhetoric from the regional Fed presidents, it's assumed that this was a deliberately planned statement to provide the market with a bit of advanced guidance. We'll have to see whether that really does mark the beginning of a shift for the Fed, though. As a side note, and a fun fact for inflation fans, he expects inflation to fall to around 2.4% by Q2 next year. Pretty punchy chat. He also mentioned continuing supply constraints within the labour market, which might be a clue for tomorrow's sweepstake. I'll leave that one with you to mull over. It hasn't affected the headline expectation though. Non-farm payroll forecast is still 690,000, and that forecast was equally unaffected by ADP private sector jobs yesterday, which showed 692,000 new jobs were created. That number was down from last month, but it did beat expectations. Today we have weekly jobless data. The recent falls there are expected to continue, but the rate of change, well, that's beginning to flatten out a bit. All in all though, dare I say it, the US jobs market is beginning to show progress. Slow progress, but it is looking more consistent. So there's a lot riding on non-farm payrolls tomorrow, and not just the top spot in the sweepstake. But let's be honest, that's all we really care about, isn't it? I can't bloody wait. Join me again tomorrow and bring your best guess for the sweepstake. Toodaloo.
If you do not have a clue, then just tweet through and ask FX Blue.